Well, hi there. I've been asked to talk about which currency is more valuable, traditional co-brand or bank rewards cards or cash back. Now, this isn't even a fair fight. I've been giving the easier side of this question. There's not even any room to argue that traditional co-brand currencies like airline miles are worth more than bank rewards points and cash back. First, Chase, American Express, Citibank, and now Capital One points all transfer to airline miles. If you want to earn United miles, you're going to earn more United miles with a Chase Sapphire Reserve card, earning Chase's ultimate rewards and transferring them to United than you will be spending on a United card. In fact, this was the big complaint that United CEO Scott Kirby had about his co-brand deal with Chase. Now, if you want to earn Delta miles, you're going to earn more Delta miles with an American Express Everyday Preferred card, earning 1.5 on all spend plus bonus categories, or an Amex Gold that earns 4x on groceries and restaurants, 3x on air, and of course, a Blue Business Preferred earns 2x on everything that you're going to be spending money on. Like, you're going to earn more points than you would with a Delta card, and you can choose to transfer the points to Delta. And you have the option to transfer to other loyalty currencies too. So you can pick and choose where you want to transfer your points later based on the airline that has the availability that you need and where you want to go. And you have more options to redeem your points too with bank proprietary programs. Say you want to buy a ticket with cash. A Sapphire Reserve card lets you spend your miles at 1.5 cents a piece towards airfare. Airlines are booking future travel liability at most a penny apiece for miles earned from flying, so they can't do that. Chase even lets you spend reserve points at 1.5 cents on other categories through their new pay yourself back feature. So you can take those points and you don't have to spend them on air travel. You can still get that 1.5 cents a piece value per point in other categories too. So there's no question that a Chase point is going to be worth more than a United mile. An Amex point is worth more than a Delta mile because it can transfer one-to-one into those, and you have the flexibility to do other things and redeem at higher value too. And by the way, these currencies also transfer to hotel programs as well. So why would you want a United mile when the same Chase point gives you the option to transfer to United or somewhere else? And I get to pick later, or spend the point as cash with higher value than I'd get out of United. There's not any universe in which comparing like to like, a single point in the bank program wouldn't be worth more than the airline program, right? And you generally earn points faster with spending in those programs as well. From a consumer perspective, there's absolutely no comparison. Second, comparing points one-to-one, right? Everyone that does outside estimation of the value of the points. I do it. I've even been an expert witness in more than one federal criminal trial on the subject. Ben Schlappig at 1 Mile at a Time, the Points Guy websites, all of them value Chase Amex City points as worth more than a single airline mile or hotel point. Now, third, compare to cashback. The baseline here is a no annual fee Citi Double Cash card that offers 2% back, but you can do better with category bonuses too. You can even earn 2.625% back from Bank of America without category bonuses. A consumer is never going to average over 2% redeeming their miles domestically. It's only the narrow case of premium cabin international travel at the saver level that you might do better. And even there, it's with constrained inventory, right? Limited cases. And that constrained inventory is often the deeply discounted inventory where you may not even be doing better than that. Right? You might still be better with a cashback card and buying the plane ticket than getting miles from the co-brand. Now, fourth, a low fare environment makes this difference even more pronounced, right? So it used to be that you might not get better than cashback even on premium cabin international, but as there are more seats than passengers for quite a while, we're going to see an increased value for cash and proprietary programs compared to co-brands. Now, fifth, co-brands do offer some benefits for having the card that are special to their co-brand partner, but that's usually a reason to get the co-brand and reap the benefits, not a reason to actually spend any money on the co-brand. Sure, get the Delta card for a free checked bag, but do your actual spend on an American Express with membership rewards. So you can still get the benefits, but it doesn't actually mean that you're better off putting any spending on the card. So there are different cards serve different purposes. The membership rewards points are still more valuable again than Delta miles. You're just getting the fee waivers off of the Delta card. Now, sixth, The co-brands that offer real value do so for a limited set of customers. Again, miles trumps cash back for premium international saver awards like only, and spend can deliver benefits to elite members where the cards are set up to accelerate earning of status. But in recent years, we've seen a move away from this. So United has continually reduced the value of Chase's contribution towards elite status and doesn't let that contribution meaningfully help towards top status. It's precisely the customers that would most be inclined to value a United product because of their affinity to United are the ones who benefit the least from the United cards. Now, by the way, the best examples of co-brands that encourage spend by riding on the rails, so to speak, of the underlying programs and really appealing to a brand's best elite customers are the Hyatt Visa from Chase and the Frontier MasterCard from Barclays, and soon the Spirit MasterCard from Bank of America. Spending earns an unlimited contribution towards status with these cards. Hyatt's program especially is geared to continue to incentivize spend because rewards come every 10 elite nights in the program, and every $25,000 in card spend earns 10 elite nights. Now 7, this isn't to say that every cashback card is better than every co-brand. There are low-value bank cards, but the overall trend over the past 8 years has been for banks to build up valuable rewards programs that drive greater return to consumers than what the co-brand portfolios offer. That's not surprising. As the cost of co-brand deals have risen, right, the travel partner is taking an increasing portion of a card's margins. So there's less to rebate to the consumer on a co-brand to encourage spend. And as these deals have gotten richer, the incentive has been for banks to build their own rewards programs apart from travel companies. Finally, I'd add that card member retention rates for well-done proprietary cards are better. Chase has revealed Sapphire Preferred's data that's better than that of any airline co-brand. That's clearly because they're providing consumers greater value. And when a bank issues their own currency, they don't incur reputational risk from an airline. But when a customer has a bad airline experience, but the only strong way for outlet that they have is canceling the co-brand. So when the bank has the traditional co-brand, they have not only their own reputation to worry about, but that of their partner as well. It's much harder to manage, much greater risk, and pretty much all on the downside in that regard. So the bottom line, there really isn't even a question here that the bank proprietary programs have become better for banks and for consumers especially. Now, that isn't to say that there's not a huge valuable market in co-brands. They are continuing to pay for these deals because consumers keep responding to them, but they're on this incredible treadmill of increasing bonuses and faster churn and programs that are continuing to devalue. The bank programs haven't devalued the way that airline programs have. Even during the pandemic, United and Delta have made their miles worth less towards their best awards, reducing the value that actually drives that credit card spend to the consumer, and the bank partner is left, basically holding the bag in that case, right? So from the bank's perspective, they can't even manage the value of the currency that's earned off their cards. So unquestionably, upside going forward, it's with these proprietary programs.